Hello and welcome to this video on The Intelligent Investor. If you're interested in investing, then you've probably heard of this classic book by Benjamin Graham. First published in 1949, The Intelligent Investor has become a cornerstone of modern investment theory, providing timeless principles for achieving better financial outcomes. In this video, we'll be discussing some of the key concepts and strategies outlined in the book, and how they can help you become a smarter, more disciplined investor. Whether you're a beginner or an experienced investor, The Intelligent Investor has something to offer, and we're excited to share its insights with you. But before we dive in, we want to invite you to subscribe to our YouTube channel for more videos on investing, personal finance, and other topics related to achieving financial freedom. And as a special bonus, we've included a link to download a free copy of The Intelligent Investor in the video description below. So be sure to check that out after watching the video. Now, let's get started and learn more about how The Intelligent Investor can help you achieve your investment goals. The Intelligent Investor by Benjamin Graham is a comprehensive guide to investing that lays out a philosophy and framework for making sound investment decisions. The book is divided into several sections, each addressing a different aspect of investing. One of the key themes of the book is the concept of value investing. Graham believed that investors should focus on buying stocks that are undervalued by the market and have a margin of safety, rather than chasing after hot stocks or following the crowd. He emphasized the importance of conducting thorough research and analysis to identify these undervalued opportunities. Another important concept introduced in the book is the idea of Mr. Market, a metaphor for the stock market that illustrates the emotional and irrational nature of market movements. Graham encouraged investors to view Mr. Market as a partner, rather than an adversary, and to take advantage of market fluctuations to buy stocks at attractive prices. The book also covers the importance of diversification and risk management in investing, as well as the dangers of speculation and market timing. Graham believed that successful investing requires discipline, patience, and a long-term perspective. Overall, The Intelligent Investor is a timeless classic that provides valuable insights and guidance for investors of all levels. Its principles have been adopted and practiced by many successful investors over the years, including Warren Buffett, who has called the book the best book on investing ever written. In addition to the themes I mentioned earlier, The Intelligent Investor covers a wide range of topics related to investing, including the difference between investment and speculation. Graham argues that investing involves analyzing the fundamentals of a company and buying its stock at a reasonable price, while speculation involves trying to profit from short-term market movements without regard for the underlying value of the company. The importance of diversification. Graham recommends that investors hold a diversified portfolio of stocks and bonds to minimize risk and maximize returns. He also cautions against over-diversification, which can dilute the potential benefits of a concentrated portfolio. The role of emotions in investing. Graham stresses the importance of maintaining a rational and disciplined approach to investing, and avoiding the temptations of greed, fear, and herd mentality. The use of financial ratios and metrics. Graham provides a number of financial metrics that investors can use to evaluate the health and value of a company, including price-to-earnings ratio, price-to-book ratio, and dividend yield. The pitfalls of market timing and forecasting. Graham argues that attempting to time the market or predict future trends is a futile and risky endeavor, and encourages investors to focus on long-term value instead. Throughout the book, Graham uses real-world examples and case studies to illustrate his points, and provides practical advice for putting his investment philosophy into practice. While the book was first published over 70 years ago, its principles remain relevant and valuable for investors today. The importance of a margin of safety. Graham stresses that investors should only buy stocks when they are trading at a significant discount to their intrinsic value, in order to minimize the risk of loss. He also warns against taking on excessive debt or leverage in pursuit of higher returns. The concept of dollar-cost averaging. Graham suggests that investors can mitigate the risk of market fluctuations by investing a fixed dollar amount in a particular stock or fund at regular intervals, regardless of its current price. The different types of investors. Graham divides investors into two categories: defensive investors and enterprising investors. Defensive investors are more risk-averse and prefer a passive approach to investing, while enterprising investors are more active and willing to take on greater risk in pursuit of higher returns. The role of management in investing. Graham emphasizes the importance of evaluating a company's management team and their track record before investing in its stock. The importance of discipline and patience. Graham advises investors to remain disciplined and patient, and to avoid succumbing to the temptations of greed and fear. He also stresses the importance of sticking to a long-term investment plan, rather than trying to time the market. The concept of intrinsic value. Graham emphasizes the importance of calculating a company's intrinsic value, that is, the true worth of the company based on its financial fundamentals, in order to determine whether its stock is undervalued or overvalued. The use of qualitative analysis. While Graham places a heavy emphasis on quantitative analysis of financial metrics, he also acknowledges the importance of qualitative factors such as the competitive landscape, industry trends, and management philosophy in evaluating a company's prospects. The benefits of long-term investing. Graham argues that investing should be viewed as a long-term endeavor, and that investors who hold high-quality stocks for many years are likely to achieve better returns than those who constantly trade in and out of the market. The dangers of market hype and speculation. Graham warns against investing in story stocks, companies that are popular or hyped up by the media or analysts, without conducting thorough research and analysis. The importance of avoiding fees and expenses. Graham advises investors to seek out low-cost investment vehicles such as index funds or ETFs, in order to minimize the impact of fees and expenses on their returns. The role of market psychology. Graham emphasizes that market movements are often driven more by psychological factors than by underlying fundamentals, and that investors must be aware of these dynamics in order to avoid making irrational decisions. The importance of diversifying across asset classes. In addition to diversifying within stocks and bonds, Graham recommends that investors also hold a mix of other asset classes such as real estate, commodities, and cash. The use of technical analysis. While Graham is primarily a proponent of fundamental analysis based on financial metrics, he acknowledges that technical analysis, which involves analyzing market trends and patterns, can also be a useful tool for investors. The dangers of excessive optimism and overconfidence. Graham cautions against becoming too optimistic about the prospects of a company or the market as a whole, and advises investors to remain humble and open-minded. The importance of understanding and managing risk. Graham stresses that all investments carry some level of risk, and that investors must be aware of the risks they are taking and actively manage them through diversification and other strategies. Reading The Intelligent Investor can provide a wide range of benefits to both novice and experienced investors. Here are some of the key advantages. 1. Improved investment knowledge. The Intelligent Investor provides a thorough overview of investment principles and strategies, covering everything from basic financial analysis to more advanced topics like market psychology and risk management. By reading this book, you can gain a deeper understanding of how the investment world works and how to make better decisions. 2. Greater investment discipline. The book emphasizes the importance of developing a long-term investment strategy and sticking to it, rather than chasing short-term gains or succumbing to market hype. This can help you avoid making emotional or impulsive decisions that can negatively impact your returns. 3. Enhanced risk management. The Intelligent Investor stresses the importance of diversification and risk management in investing, and provides strategies for minimizing risk and maximizing returns. By following these principles, you can build a more resilient investment portfolio that can weather market fluctuations and downturns. 4. Better financial outcomes. By following the principles outlined in the book, you can increase your chances of achieving better financial outcomes over the long term. This may include higher investment returns, greater financial stability, and a better ability to achieve your financial goals. Overall, The Intelligent Investor is a valuable resource for anyone looking to improve their investment knowledge and strategy. Whether you are just starting out in investing or are a seasoned investor, this book can provide valuable insights and guidance for making smarter investment decisions. Thank you for watching this video on The Intelligent Investor. I hope that you found it informative and helpful in your investing journey. If you enjoyed this video, please consider subscribing to my YouTube channel for more videos like this in the future. Also, as a special gift to you, I have included a free download link to The Intelligent Investor in the video description below. This book is a timeless classic that has helped countless investors achieve better financial outcomes, and I believe it is a must-read for anyone interested in investing. So be sure to download your copy today and start applying its principles to your own investment strategy. Thanks again for watching, and I look forward to seeing you in the next video.